Hello, this is Ruben from Property Solvers, and welcome to another podcast. I'm here back with James, who's been away for the last week or so. How are you doing, James?
Hey Ruben, I'm good. How are you doing yourself?
Yeah, I'm good, thanks. I'm good. Okay, so the topic we're going to be talking about today is buying property in London. So I thought I would start by just looking at some house price trends over the last, let's say, 5 years, and having a bit of a discussion on the back of that. So what we've noticed as a property buying company is that London prices have pretty much plateaued over the last probably 8 or 9 years. There hasn't really been that much movement. There was a bit of a peak during post-COVID around kind of 2020, well, during as the lockdowns were kind of coming to an end, or people were getting out and about a bit more, towards the end of kind of 2021, 2022. And pretty much since then, the prices have remained pretty much flat. They haven't been decreasing, bar since around 2022, when they did start to drop a little bit, but that was kind of in more relation to the interest rates. But just to give you some statistics, in February 2019, the average nominal house price in London, this is covering the Greater London area, was around 466, and then that peaked in July 2022, when we were in the midst of kind of the interest rate hikes, at 537. And in February 2024, bearing in mind there is always a bit of a lag with UK house price index prices, they went down to around 507. So there hasn't really been a huge amount of movement over pretty much since around kind of 2015. So yeah, would be interested to hear what your thoughts on it, James, and why do you think that happened? Because we did see that boom, not too long after the financial crisis, which went on for about kind of 4 or 5 years. But then why do you think the market's plateaued over the last few years?
Yeah, it's a funny one, right? Because the London market is kind of seen as like the pinnacle of property investment for most investors in the UK. And obviously, there has been times in the past, like you said, straight after the financial crash, when being in the London property market was a one-way ticket. I mean, it was at a time of high wage growth, yet low unemployment, and house prices really boomed between sort of, I guess, the end of sort of 2000 and, well, mid 2009 to 2016.
Hmm.
And I mean, I've done a little bit of research myself on some of the statistics since then. And obviously, since sort of, yeah, 2016, in a time when we've had sort of like relatively high inflation, particularly in recent years and since COVID, what we've actually seen is we have seen a small drop in nominal terms, as you've rightly pointed out, Ruben, since the peak, which I think was in March 2022.
Yeah.
I mean, there's various statistics behind, and obviously there's different bodies that connect that collect this sort of data. But the sort of on the ONS data, I mean, we've seen prices drop about 3.6% in nominal terms since that peak of March 2022.
Hmm.
But what it doesn't tell you is what is the real term drop in house prices when adjusted for inflation. And obviously, since COVID, I mean, inflation has been up, like, I mean, it reached over 10%, right? So if sort of the cost of things is increasing by 10%, yet the price of houses are dropping by a couple of percent, then that's a big drop in real terms.
Yeah.
And just, I mean, I looked at an article in the Evening Standard from April 2023, and they actually look at what happened, what's been happening with house prices in real terms since 2016, and according to them, there's been a 24% drop in the London average house price since 2016, which obviously, you know, is a way bigger drop than what you would think if you just looked at nominal house prices.
Which is what
And obviously
most media outlets do, right? They tend to kind of always point to that, you know, the kind of headline figures are generally.
Yeah, and I mean, as you said, I mean the average house price in London is still really high. I mean, the one that I took from the ONS was 528,000. That was
Right.
in June last year. So as you said, there's a lag there. But they also reported the lowest average like house price inflation, which was a negative growth of 3.6, and at a time when the Northeast had the lowest prices in the country at 161,000, but the fastest growth, which still was like extremely small. It was 0.2% positive growth. But at a time when London is dropping, it paints a completely different picture of what most property investors would expect.
Yeah.
And definitely in the last sort of 8 years, I mean, the North, or let's say above Luton even, has significantly outperformed London and some of the southern regions. And obviously, if you take into account what rental yield differences are, because obviously your rental yields in London are sort of down around sort of 5% average, whereas up north, you know, you could get 7-8% as an average. So when you add that to your overall return, it's definitely shown that over the last few years, you know, outside of London would have been a better place to invest your money.
For sure. I mean, yeah, London's also got a number of micro markets. I mean, I'm based in Sutton, which is zone 6, and you've got these little kind of pockets of areas surrounding London where, you know, price trends don't necessarily follow the same patterns as what you see in central London, kind of zone 2, zone 3, you know. So I noticed even now properties are kind of selling at healthy prices, you know, above what they would have a couple of years ago even. So I think when you're looking at London, it's always worth taking a bit more of a granular approach to each area, because each one has its own nuances. And you know, there's different things happening in every different borough. You know, so Sutton, for example, there's quite a lot of investment happening here. Same with, you know, other South London areas. In East London, there's a lot of expansion. So if you're looking for property, it's always worth exploring the specifics of the individual borough. And seeing if there's, you know, certain trends and that are happening, and you can pick up some you know, tap into those opportunities as they come your way. And I mean, sorry, James.
Sorry, Ruben, go on.
No, that's fine. We'll talk about it afterwards.
Yeah, I mean, another thing that I was just going to add to that is like when you are looking at sort of where to invest in individual markets. Like, for example, if you look at this sort of house price to earnings ratio, in 2016 in London, that got to a record high. So house prices were up at sort of 12 times average earnings. So, you know, if you're looking at these kind of metrics and you're sort of trying to decide which market to invest in, I mean, if you see the house prices at our record levels to earnings, that would be like a warning flag or a red flag that maybe this is a property that's a little bit overheated. I mean, it's still just under 10 times earnings, so it has dropped quite a bit, but obviously it still looks like extremely high on a historic measure of like what it would be to like house price to earnings ratio in London. So that was one of the things to look at. Another thing, you could notice.
How do you check? I mean, how does it compare to other parts of the country? That whole kind of affordability issue. How does London compare to other areas like the North and the Midlands?
Yeah, I mean, I think like long term, like the average house price to income ratio should be about 4.5 to 5 times.
Right.
Which would be more in line, obviously, the further north you get, the lower that ratio is. But obviously, you have to look at each individual market, see what wages are doing and house prices, and have a look at sources like the ONS to find out that data.
Yeah.
But another interesting metric to look at is the difference between like how many times London prices are the national average. So again, in 2016, that ratio reached a record high. So in 2016, the average London property price was 2.2 times the national average.
Right.
So again, a record figure that's now dropped to 1.79 times as the gap between sort of London and the rest of the country starts to shrink. But yeah, I mean, you look at all these figures together, and it does show like there actually has been like a little bit of a crash going on in London, but it's been masked by high inflation. You know, and obviously where it goes from now, you need to draw your own conclusions. I mean, obviously it's had a period of like the metrics have come down. I mean, to me, they still look overvalued in historic terms. But you know, at least they're getting back to some sort of level of normality. I still think they've got a way to go yet, though.
Yeah, I would probably agree. I mean, that issue of affordability in London has always been a problem, particularly in the last, I would say, 10 years, you know, because with the mortgage market review that happened after 2008, the crisis, you know, it just made getting into the London property market really tough, particularly for young people, because I think when we were first starting out, you didn't need as much of a deposit to kind of get into buying property, you know, maybe even a starter home. Whereas now you need to be putting down about 30% as a minimum. You know, there's really strict checks to kind of get the mortgage in place. And a lot of people, you know, are earning quite well in London, but they're not going to be able to afford, you know, 100K, 150K deposit, you know, unless they get help from the bank of mum and dad. So it's really ostracized a big proportion of young people out of the market. So I definitely think that's affected things in terms of people being able to get on the ladder. And I know my parents' generation, they found it a lot easier to be able to buy in places like South London and North London compared to how it is now. And another factor is the Help to Buy equity loan scheme that got halted. I think it was 2023 where that got halted. I was never really a big fan of it, but it did kind of really boost the market up in London. I think that was probably
Help to sell.
Sorry, what was that?
Help to sell, they call it. A lot of property investors call it, right? Because it seemed to help
Yeah,
the
so
help buyers.
and the prices were just going up crazily in, you know, in across London for these new builds that weren't that great, you know. So I think, yeah, you're right, James. I do think there is a bit of a way to go for London prices. So do you think buying in the current market is?
Yeah, I mean, obviously, like,
James,
sorry, Ruben. There seems to be a bit of a delay.
Yeah.
But just what I was going to add to that, I mean, obviously, like a key component in the London property market is interest rates. I mean, obviously, it's extremely important across the country, but in London, where house prices are so much higher than the rest of the country, like every incremental increase in interest rates makes a huge difference to the bottom line for homeowners. So really, what we need, I mean, as long as interest rates remain high, I think the property prices in London are going to continue to come down. Obviously, when the interest rate environment changes, you know, that could be sort of a good time to sort of, well, I mean, now, to be honest, you can still find deals in London. I mean, we're picking up some good deals in London. But as the interest rate environment changes and interest rates drop, like London does usually lead the way. with the rest of the country. And this was it played out the same way in the last housing crash, right? London went first. I mean, it was stagnant for years. The north was blowing up. I mean, I remember, like, you know, we were buying in Sheffield and Derby at the time, and house prices were going like 15-20% a year. The auction rooms were going crazy. Like, I mean, some of the prices that were being achieved at that time, I mean, I was just looking at them thinking, how the hell can you make money on these auction properties that people were snapping up?
Yeah.
And I think it's kind of seems to be following the same pattern this time. Obviously, London's been stagnant now for a number of years. All the metrics are starting to get squeezed for London. And yeah, it's really going to follow closely to what happens with interest rates. That's key to the London property market. So once that starts changing, I think that will be the point. Obviously, it's going to take a while, because interest rates to come down to sort of a reasonable level is going to take a fairly long period of time, I would think. Sort of 1 or 2 years, I would imagine. But over that time, I think you will start to see the London market pick up again.
Yeah, I agree. I mean, yeah, I wouldn't say it's a good idea to sit on your hands and wait for these interest rates to go down, because there certainly are opportunities out there. And whilst I probably wouldn't be recommending going out there and looking for kind of vanilla buy-to-let properties, because, as you say, James, the yield is just far too low relative to the pay rate that you can get out there. But I think there are some opportunities out there that we're going to be exploring a little bit more, particularly commercial conversions. You know, as I was mentioning earlier, areas like Sutton, you're kind of walking up and down the high street, you're seeing all these shops closing down. I'm kind of wondering what's actually going to happen to these kind of buildings, you know? And I think there's an opportunity there for them to be converted into either mixed use or you know, fully residential properties. I think that's an interesting opportunity in London, across the city. You know, so I think there's certainly opportunities, and you know, we're certainly going to be exploring them. But yeah, I think, as you say, James, getting into kind of buying a buy-to-let property in London in the current environment, I don't think it's, unless you can buy really well, I don't think it's the best idea. You know, but I think there's certainly opportunity out there. Yeah, did you want have anything further to add, James?
No, I think, yeah, like you said, I mean, there's always opportunities, and obviously, like, the movements on a fundamental level in terms of like people leaving offices, and the decentralization of staff, and the move to sort of outer London, and people looking for more space. I think that in itself, with all the changes that happened as a result of COVID, presents opportunities. In like commercial, you know, in offices, chance for conversion. So yeah, in every sort of downtime, there's opportunity for people with their eyes open. So like you said, we'll certainly be looking for those opportunities in the next couple of years.
Yeah, for sure. Okay, well, that's great. Really enjoyed that conversation. And yeah, any comments, feel free to add them. And yeah, please like and subscribe, and we'll look forward to speaking to you on the next podcast. Thanks a lot.
Thanks a lot, guys.
Take care. Bye.